Okay, we are back. I'm very happy to have on the Goldstein on Gelt show Jason Bond, who's the owner of Jason Bond Picks. Jason, real pleasure to have you.
Thanks for having me, Doug. I appreciate being here.
So on your website, Jason Bond Picks, you refer to yourself as a swing trader. Are you a swinger?
Well, what I try to accomplish is money in that sense. 1 to 4 day holds, 5 to 10% profit. That's really what I mean by swing trading there.
Okay, so we're referring to, like, it's often the term people use is day trading as well?
So with day trading, the guys and gals are looking to get in and out and be cash before the market closes. With swing trading, we're carrying the positions overnight, and that can lead to more explosive gains if you can time news plays or earnings run-ups in the proper way.
Okay, does that also possibly go to the other side, which is after the market closes, bad news comes out?
It's happened to me quite a few times, unfortunately.
So why don't you close up at night?
Well, so I find that my target market in teaching this newsletter is the busy professional who isn't looking to close up before the end of the day. Often the gains within the day are smaller than what you can achieve in a 1 to 4 day time period. So it's very difficult for somebody who's actively teaching, or a construction worker or a doctor or a lawyer, to get my alert, jump in the trade, and then jump out the same day. So I find that my target audience, my clients, really like the 1 to 4 day hold time with a small rinse and repeat strategy, 5 to 10% profit.
Mm-hmm. Okay, let's just clarify, because I think it's important that people understand when you're talking about clients, you're talking about people who read your newsletter, as opposed to, in other words, you're not a stockbroker. You're educating people how to trade. Is that what I understand?
Yeah, that's a good clarification there. So when I refer to a client, it's somebody who pays me my quarterly fee. To me, that's a client. So I have a free email list and a premium email list, and when people sign up for the premium email list, they have the opportunity to swing trade with me or day trade with us. So the day trades are done in the chat room. The swing trades we send by text and email in real time.
Mm-hmm. One of the problems that a lot of people have in trading is, in any sort of trading, whether they're short-term or long-term investors, is that they get really tied down by the emotions, meaning it's either difficult to them to lose money, or they get so excited when they make money that they end up messing themselves up. How do you teach people to control their emotions?
That's probably one of the biggest lessons on my website, because it's something that happens every single day. So we'll have a monster win where we get caught in some really good news. For example, we were in Coffee Holding Company once, ticker symbol JVA, and they guided early and just crushed shorts. It was 100% winner within 4 days, and we locked that profit on the way up. So you get super excited and you want to hit those big wins on a regular basis. You stop taking your 5% winners, and it just messes up the whole strategy. So that's kind of the one end of the spectrum, getting too excited, getting a really big win, and then it causes you to mess up your consistent 5 to 10% winners, because you want to experience that high that you get from the really big win. And then, of course, on the other side of the coin, I was in Zynga one time, hooking up my I was in the basement after hours. I was hooking up my washer and dryer in the new house, and they guided down, so immediate 15% drop in the after hours. And, once they guide down, it's not coming back anytime soon. So there's that low, and you have that spectrum, high and low, and then in between are those 5 to 10% winners. And what I try and teach clients to do is don't feel that emotion of that 100% win, because it's not going to happen a lot. Don't let it affect what you're trying to accomplish day to day. If it happens, great. And if you have the horrible trade where you get caught in some bad news, or you let your stop loss go too far and you have to, take a big hit, don't get too low on yourself, and just keep that constant, even mindset in all situations, whether it's a bad loss, a normal 5 to 10% win, or a 100% win. Just even mindset. And through accomplishing that, I think it allows people to brush off those highs and lows that you said and focus on what works, which is, hitting base hits. We're not trying to get home runs. We're just going for those base hits.
All right. We are talking with Jason Bond, who is the owner of Jason Bond Picks, teaches people about how to both do day trading and swing trading. Jason, I'm sure a lot of people have asked you that the SEC and the regulators have put out a lot of warnings about day traders. And, they say that people have to be exceptionally careful that from starting, but they may just simply suffer severe losses, or it's very stressful, or they don't know what they're doing. it seems like you've really been working on educating people. What do you say when someone comes to you and says, "Well, the SEC says this is like, as dangerous as smoking cigarettes"? More.
I'd say the SEC is right. So I'm in line with their statement. It is dangerous, and it's something I try to deter my client from. And if they want to do it anyways, we provide the environment for them to do it. So when you sign up for my service in the welcome email, I give a warning as well as a video from a professional who recommends not day trading. So it's a unique situation where I sell a newsletter that was built. The foundation of Jason Bond Picks was built on swing trading. And by default, I attracted a lot of day traders as well. And I realized that there's a market there for it also. So I can either push them out to somebody else who sells a day trading newsletter, or I can provide an environment within my swing trading product for them to day trade. But because the service was built on swing trading and holding across several days, and sometimes a couple of weeks or even a couple of months, because it was built on that, I introduce a client to, please don't day trade. It's the first thing I say in my welcome email. Please don't do it, because they get so attracted to those big wins. They see, professional day traders who have learned to master their mindset, have success, and they jump in and they blow up their accounts. And unfortunately, as the author of the newsletter, I deal with the people who don't listen, and they'll write me an email and they'll say, "Oh, I wish I listened to you," et cetera, et cetera, et cetera. And that is probably one of the most frustrating things because a beginner shouldn't day trade. Intermediate trader shouldn't day trade. It's really for advanced level traders, professionals who not only have mastered the market, but also, like you said, mindset. Because I see some crazy things happen on stocks where they get halted, in the middle of a run and open up 20% lower on some crazy news, or there's a buyout and day traders are short at that point in time and it gets halted and it opens up 40, 50% higher, and so crazy swings like that happen all the time. And unfortunately, beginners can get themselves railroaded real fast if they don't pay attention.
And do you find that a lot of times beginners or even intermediate investors try to use margin, meaning that they borrow money in order to increase the size of their trades? So, for example, if someone thinks he's going to do a 5% trade where he'll make a 5% profit, he says, but if I borrow my money and double up, I could make 10% on the same trade or more potentially. And of course, that can go both ways. Are people involved in a lot of margin trading that you see?
I try to, all right, so because I'm not an investment advisor, there's a fine line with what I can tell a client to do and what I can't. So I can't really advise clients on that topic, but I can tell them and lead by example with regard to what I do. So I make it very clear to clients that I do not use leverage. And when they ask if they should, I say the same thing I just said. I'm not an investment advisor, but I don't use leverage because of this, this, and this. So I'll name those things. You want to go big on somebody else's money and you lose somebody else's money. It's kind of like taking, a bank loan for a house that loses, a significant portion of its value. It's just not a good situation to be in. You don't want to be underwater. I just don't believe in trading on Wall Street with a credit card. So
yeah, that's a good example, right?
Yeah, it's what I try and tell them. But again, Wall Street's Wall Street. I do find that it attracts a lot of gamblers. There are a lot of people who are very consistent and they are focused and they go for those 5 to 10% base hits and they stick to the plan and they only trade on their cash basis. But I'll be honest with you, I do see people use leverage on a regular basis, and it's not my place to tell them what to do. I can only tell them what I do and lead by example, if that makes sense. But I agree with you. It attracts that type of trading, unfortunately. What I see a lot of lately, too, is people going to prop firms. People will ask me what prop firm I recommend so that they can get larger accounts. And I just stay away from that. I don't do it myself. I've been approached by a lot of prop firms, especially this year, having the results that I've had. And I turn that down. I just like to trade on a cash basis. Never go into a leverage situation. And so hopefully that at least is a good example. My goal is to be a good teacher. And I think that if I stick to those rules, at least I'm showing other people what I think they shouldn't do.
Have you found it's a problem, or have any of your clients found that when they're trading small accounts, they're trading against the big boys a lot of times, people who might have much faster execution, much better trading systems. And it's actually a big issue on Wall Street now that companies want to be closer to the exchange because simply the time it takes for the speed of light that it takes for the electrons to travel to do the transaction, if you're further away, take longer and can mess up a trade. Are your trades that delicate, or have you been affected by this?
I don't think my trades are that delicate, but I have been affected by one article I saw on MarketWatch was algorithmic trading, and the computers that we're fighting against now. There was a particular company I was in. It was a smaller market cap, I think about $100 million company, James River Coal, so it was right in there with Alpha Natural Resources and Arch Coal and whatnot, BTU, Peabody Energy, and Walter Energy. And so we took the smallest of the coal stocks, and I put a good till cancel stop loss in, and I forgot to remove it at the open on a particular morning. And so the market opened. They dropped all the way down to my stop loss. It was an instant $8,000 loss. Took all of my shares and immediately snapped the price back to above the open. And it was one of those things where it was just blatant crime. I knew it. Everybody else knew it. And I was just robbed of my shares and $8,000. I mean, it was stupidity on my part. I don't blame anybody else, but that is the market now. Everybody else can see your orders, and that algorithmic trading out there where the running stops happens all of the time. I think that definitely affects the little guy like myself and my client for sure. And that was a specific example where I was just in shock. I was the only volume. They took my shares and snapped it back, and I would have been at a profit within 2 minutes time. And so it definitely is computer-based trading right there.
That is quite a story. Jason, we are just about out of time. We've been talking with Jason Bond, who owns and runs the educational website called Jason Bond Picks, which is designed to teach people how to be swing traders and day traders. Jason, the last few seconds, just tell people, how can they follow your work?
If you'd like to learn more about swing trading and day trading or my business model in general, just sign up for my free email newsletter at jasonbondpicks.com. And I keep in touch with the free list on a regular basis, once in a while giving out a free swing trade idea, but mostly keeping them up to speed with the lessons, good and bad, that I experience on a daily basis. I want to point out that my newsletter, unlike most Wall Street newsletters, focuses on the downside as well as the upside. There are unfortunately bad things that happen in the market at times. I'm up 37% this year, so I've had a really good year. But within that, there are lessons of good and bad, and I think that can benefit real traders.
All right, Jason Bond, thank you so much for your time.
You too, Doug. I appreciate being on the show.
You've been listening to the Goldstein on Gelt Show with money maven Doug Goldstein. Doug's weekly radio show is heard around the world, but if you miss it, you can download the podcast at www.goldsteinongelt.com. The Goldstein on Gelt Show gives you up-to-date financial ideas so you can get on the path to financial freedom. If you'd like your questions answered on the air or off, send Doug an email to doug@profile-financial.com. It's your money for your future, so join Doug every week to build your wealth on the Goldstein on Gelt Show.